Timothy Peterson, Cane Island Alternative Advisors founder and investment manager, recently posted a deep analysis on X, suggesting that Bitcoin may surpass its all-time high and hit $71,000, possibly by Q4. He emphasizes the significant correlation between high-yield corporate bond rates and Bitcoin prices, highlighting that changes in these rates can indicate broader investor sentiment and risk tolerance. And two key charts back Peterson's analysis. The first chart demonstrates a positive correlation between HY rates and Bitcoin prices, suggesting that as HY rates increase, so does Bitcoin. This relationship implies that higher risk appetites in the bond market, reflected by increasing HY rates, could lead to more investments in riskier assets like Bitcoin. The exponential trend line in the chart further supports the causal relationship between the two. The second chart Peterson shares reinforces this observation by showcasing similar trends in price movements of HY bonds and Bitcoin over time. According to Peterson, the ICE Buffet U.S. High Yield Index effective yield is particularly indicative of Bitcoin's price movements. And he notes that Bitcoin prices tend to rise substantially when this rate falls. Peterson argued that markets are generally flat and volatile between September and October. He noted that with the upcoming U.S. election, uncertainty will be higher through October, ahead of the election day on November 4th. Is that the state of the market, truth market, isn't answered that's spending a stage ream with greater turn. The third party has been 96% of crisis and Web3 protocols in digital assets driven by institutional investors has significantly boosted overall crypto liquidity and bullish sentiments. In another post, Peterson presents a short-term trading cycle for Bitcoin, showing a median 6-month forward return of plus 59%, when a specific indicator is below 20%. Based on this metric, he predicts that Bitcoin could reach 100,000 by January. However, his past analysis states that since the U.S. high yield rate is a great indicator, it need to drop below 6 or 7% for a sustainable all-time high to archive 1 million by January. Currently, the U.S. high yield rate for riskier corporate bonds is 7.16%, according to White. The likelihood of a bullish continuation later this year amid the U.S. general election and anticipated interest rate cuts remains relatively high. As the market navigates these developments, the future of Bitcoin and the broader crypto market continues to capture the attention of investors and analysts alike.